Beer gang, where you at? Beer's looking nice and strong, is it not? How are we doing, everyone? Welcome back to the channel, and if you are new, welcome. A lot of you haven't subscribed to my channel that are viewing my content. So before the video starts, if you are finding value within my videos, leave me a like, leave me a comment, and subscribe to my channel and turn on notification bell. We're almost at 1,000 subscribers, and I appreciate every single one of you. When we hit 1,000 subscribers, I'm going to do a little giveaway. I don't know what yet. I'll think of something when we get there, but I do want to do a giveaway just to give back to you guys who are viewing my content, as it does mean a lot to me. However, in this video, what we're going to be taking a look at is the trade that I took on USD Canadian dollar on Thursday. It was a 3% short position that I banked, and I wanted to show you guys, break down the trade and give you guys an insight into how I find and identify the order blocks, supply and demand levels that I use to trade from. So let's get on with the video and let's get on with the trade breakdown. Okay, let's get this breakdown moving. The first thing I did and the first thing I do when I come to my charts and trying to identify areas of supply or demand, or order blocks people like to call them, is I like to look at the higher time frame. Okay, I like to understand what the higher time frame is doing. I like to see the directional bias of the higher time frames. As we all know, the higher time frames hold a lot more weight to the market. If the higher time frames are pushing bearish, that is the overall direction of the market, and the lower time frames don't hold as much weight. So that's why I like to look for my levels of supply and demand on the higher time frame. So I was starting off on the 30-minute time frame. As I am a day trader, there's no need to go any higher than the hourly realistically, or the 4-hourly, but this trade and this area of interest was identified on the 30 minutes. But what we could see, okay, simply was price was slightly ranging in this area, but what we could see, the overall direction of the trend was price was pushing down. Okay, if we also looked at the 4H time frame, what we could see, price was just struggling to make highs. Okay, price was struggling to make new highs above this level here, therefore indicating to us that we have strong potential sell volume. Okay, so that was my bias. I understood that the market was pushing down on the higher time frames, so my bias was to purely look for short positions. So jumping back into the 30-minute time frame, what I could see on the 30-minute time frame was I could see a strong level or area where price had pushed impulsively from. Okay, it's important that when looking for supply and demand levels or order blocks, that the area you're trading from or want to trade from, that this area has pushed impulsively. Okay, you see strong candles with large amounts of volume. Okay, this is the idea behind it, that this area here is supply. Why? Because price exceeded demand. Price pushed to the downside with a lot of volume, indicating to us that there's potential institutional traders, banks, whatever you want to call them, at this area here. And what we also got to understand, okay, is that this strong push to the downside broke structure to the left. Okay, what we had was a break of structure to the downside. Okay, this move, impulsive push here, remember impulsive, this impulsive push here broke structure here, making a new low. So that was the two confluences to identifying this trade. We have the higher time frame pushing bearish, so we know we're looking for shorts. What we then have is a strong impulsive push to the downside that broke structure to the left, validating our area of supply, our order block, whatever you want to call it. And what we could see here was the last down candle before the strong push to the downside. Okay, so the last down candle before a strong, or last up candle before a strong impulsive push, is usually the order block area, your supply level, your demand level, right? So what I then did was I refined it down to the 15 minutes. Okay, what we could see here was this last down candle, right? This was the last down candle before the strong impulsive push to the downside that then broke structure. And as you can see, clear as day, we have strong impulsive candles with lots of volume. That's all we really need to be identifying: strong impulsive pushes with lots of volume that break structure. And then we're looking for the area, we're trying to refine the area and look for the last up candle in this example, or the last down candle if it was a push up example or push up trade. So we're being patient, right? What we did was we wanted to see price pull back into this area of supply. Okay, what I wanted to see is I wanted to see price push quite impulsively back into this area, filling this imbalance, right? It's important that you understand how price actually moves to your POI, your order block, your supply and demand level. What we actually saw here, okay, is we saw that price pushed very impulsively up into this area. What happened any second out here? We had a strong push to the upside into our POI, our point of interest, okay, the supply level. What this is doing is a lot of people feel as if, okay, price is pushing bullish, the trend has changed, let's look for buys. This push here is basically trapping buyers, okay? They think that the market's now going to push up. We see bullish structure here, corrective, and then impulsive. What happens here is when price breaks this structure here, this small higher high, breakout traders get involved, okay? Or break and retest traders try to get involved to look for the continue to the upside or to look for potential buying opportunities, not knowing that the higher time frames are bearish. We know that this push broke structure to the left. This was the new low. So as part of structure, the market is pushing down. But what they're seeing here is price pushing up, an impulsive move. They then think that price is going to continue pushing bullish. But like I said, little do they know we had this supply level here, which ticked all the boxes to validate that this is a strong level, which we went over in the beginning. And then we see price push impulsively to the area. We have it here, price pushing impulsively. We have a higher low. It wouldn't have been a bad idea to look for a buy here, but we were looking for sells. We're trying to trade with the higher time frame sentiment to increase the probabilities of our trade. I had my limit order set at the 50% mark of this zone, and then with my stop loss just above with a 4.5 pip stop, targeting a 1, 2, 3. And as we can see, guys, price pushed into my area, triggered me in, and we were very close to being stopped out. We were about 1 pip away. Thank goodness I use a raw account, because if you were using spreads, that would have taken you out. But what we saw is price triggered us in, okay? We then start to see the wick rejections. We then see, again, a doji candle. This candle telling us that the bullish pressure is depreciating. We had a strong push into the area. It triggered us in. And then we see a top wick, being this wick here, rejecting any higher prices. And then we have a indecision doji telling us that prices have become indecisive and the bullish pressure has depreciated. This is what the wicks are telling us, and this is what the price action is telling us. But of course, I was already triggered into the trade, so I didn't need to worry too much about that. And as we can see, price just absolutely fell, okay? We smashed our 1 to 3, but I want to show you guys, if we jump down to the 15-minute time frame, price absolutely dropped after it triggered me and take profit on this trade. And as you can see here, the market absolutely tanked. In hindsight, you can say, oh, I should have held the trade, I should have let it run a go, but I followed my plan, I stuck to my strategy, trading no minimal than a 1 to 3, which I was happy with. And the reason why I chose a 1 to 3 with this trade was due to this impulsive push here. I was just targeting the bottom as I was anticipating price to easily clear this imbalance that price had made on the lower time frames. I hope you guys enjoyed this video. I hope you lot found some value in it. If you did, leave me a comment and leave me a like down below. Let me know that you did. And if you didn't, hit the dislike button. Either way, it's going to help me out. When I hit 1,000 subscribers, I'd like to do a giveaway, but I'm not too sure what I'm going to give away. But I do want to give back to you viewers who are showing me support. And I'll see you lot in the next one.